You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again to break down everything going on in the world of futures options. Yup, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever exciting, at least we think so, Options Insider Radio Network. Reminding you, wherever you get this content, Apple Podcasts, Spotify, I saw it up there on Audible recently, so you can get your epic works of literature and TWIFO and everything else we do over there on Audible. Whatever platform you're getting it on these days, make sure you keep rating and reviewing. There have been a legion of new participants in these markets recently, and they need a place to turn for reliable information. So keep rating and reviewing. It really does help those folks discover the content. And of course, keep those questions and comments coming in too. We do love to hear from all of you out there. And let's see who we're hearing from on the program today. First, let's go back out to the FTSE Russell studios, where I am pleased to be joined once again by our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Mr. Smith, welcome back to the program. How are things in the FTSE Russell studios these days?
All good here, Mark. Looking forward to having a great show. Thanks again for having me today. Really looking forward to just a fantastic show today.
I know why you're excited, because holding down the CME Group hot seat, it seems like he's just a regular on the show now. He's got so many new products coming out that he needs to talk about. Our old friend, Mr. Tim McCourt, the Managing Director and Global Head of Equity Products over there at CME Group. Tim, welcome back to TWIFO, sir. It has been too long. I think it's been about a month.
Too long indeed. So it's about a month. Time for another new product from me and the team. And, great to be here with my friend Sean. Great to hear you, Sean. I look forward to seeing you in person soon enough.
Me too. Can't wait for that.
And I can't wait for the movers and shakers. So let's get to it.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. You know what we're about to do, about to break down all of the action to the upside and to the downside, aka the light side and the dark side at CME Group this week. Mr. Tim, it's been nearly a month since you've joined us. I'm not sure if you remember how all this works, but where should we begin our journey this week, sir? To the light side or to the dark side?
I'm going to go with the dark side. I think last time I went with the light side, but let's mix it up a little bit and start with the dark side.
All right, mixing it up. I think Sean's going to be a little bit offended by that. He's more of a light side kind of guy, but it's all right. I'll run interference for you here as we kick things off. Moving to the dark side. It's another week where it's mostly green on the screen, a little bit lighter than I would say. It was super heavy a few weeks back here on the show. This week looks like we can get a bottom 5 plus another 5 or so. So you can get a little bit more than 10 to the dark side this week. So you're talking roughly about 2/3 light side and then about 1/3 or so dark side out here. But a lot of green on the screen. We'll get to that in a second. Let's start dark side. Number 5 to the dark side. So the bottom of our bottom 5 here, we've got the S&P Mid-Cap 400 off 1.67%. Number 4, going back out to the livestock feeder cattle, off 2.62%. Number 3, a product we may have heard about once or twice here on the program, the Russell 2000, off 3.21%. It was up 3.14% last week and moving strong in the other direction. So yet another week with some more movement, some more volatility out there in the land of small caps. Number 2, going back to the livestock, it's live cattle, off 3.68%. And number 1 with a pretty small bullet this week, NASDAQ 100 off 3.75% to the dark side. A lot of that maybe coming in the recent turn we're seeing out there today in the NASDAQ. Let's go on out now to the light side, number 5 to the upside direction. It's a strong green direction. Like I said, this week, listeners, Eurodollar is up nearly 7%, 6.94%. It was number 4 in the other direction last week, off almost 1.5%. Number 4, it's been a lot of ags on the show of late. Got a feeling that may continue this week. Number 4, it's corn, up 6.98%. It was number 3 in the same direction last week, up 6.07%. Number 3, it's a product you all know and love these days. It's Bitcoin, almost 8.2% to the upside this week. It was number 17 last week if you went down that far, up not even 2%, 1.6% last week. So a little bit more paper to get to. We'll get to all that in a little bit out there. Number 2, going back to our old friend dairy. I haven't talked about this one in a little bit. Class 3 milk, up almost 8.75%. And number 1, you can probably guess by now, it's kind of a bit of a broken record, lumber. The old dead trees on fire yet again, figuratively and hopefully not literally yet. Not part of that season yet, but hopefully not yet there. But lumber up 12.08%. It was number 2 in the same direction last week, up 7%. It's just yet another week. Sean, I'm sorry. I think our hashtag fence watch is going to have to wait, sir. I don't think this is the right week to be building your fence. What do you think?
Yeah, this is these lumber prices are just through the roof. It's I'm afraid to ask for another quote to get my fence built. So, yeah, maybe we're going to wait for a dip.
Just add 12% to that quote from last week, and there you go. Every week it seems like 10%. If you don't buy that fence now, sir, it's going to be you have to mortgage your house to build a fence pretty soon out there. That's where we're looking at these days. But let's hang our hat. Since Tim is joining us today, let's start with the middle of our upside this week. Let's kick things off in crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
There you go. You like that, Tim? We added that transition just for you, sir. Time to talk crypto.
Love it. It's get me pumped up here as I was waiting to start this section of the show.
That's our job here. Get you all fired up. Well, let's kick things off. Like I said, Tim, we like when you come on because it usually means you got some new products in store for us. Last time we were talking some more bite-sized equity contracts. Now we're going back out. And Tim, I've lost track of how many times I have asked you over the years, when are we going to see a smaller Bitcoin contract from CME? When are we going to see a smaller Bitcoin contract? Obviously, the contract you have, it resonates with the institutional size, and it's nicely sized for them, but it's a 5x contract. And as we see Bitcoin gaining a lot of value over the course of the past year, that 5x multiplier has become even more expensive and also more prohibitive for a lot of the retail players out there. So I'm glad to see, Tim, you finally have taken my advice and going with a little bit more bite size. Why don't you catch our audience up on the contract that is clearly based on all the feedback I have given you, sir?
Absolutely. I mean, you've been asking, along with a lot of our other clients and the market participants. And like I say, we listen to customers for the product development process here at CME, and sometimes you just need to give the crowd what it wants. And the crowd certainly wanted micro Bitcoin futures. Mark, to your point, here, if we go back to long way back to Q4 2020, not too far in the distant future, we really started to see the price of Bitcoin rise. And our original, the OG Bitcoin future at CME Group, has a multiplier of 5x, right? So that's 5 Bitcoin that future is worth, which at today's Bitcoin price of, let's say, $55,000, that's a $275,000 notional contract, which is, just price some people out of that contract. It's become prohibitively expensive when you look at the margin on that contract. So we have introduced micro Bitcoin, which is 1/10 of 1 Bitcoin. So that contract is about $5,500 in price. And that places it at 1/50th the size of its older sibling, the original Bitcoin futures contract, BTC. The micro Bitcoin futures contract symbol is MBT. So Mary Boy Tom, micro Bitcoin. It's cash settled against the same CME CF Bitcoin reference rate, which is that once a day reference rate for the US dollar price of Bitcoin. And all of the things are the same tick size, same listing cycle, 6 nearest contracts, 2 Decembers further out. And it's off to a great start. So far this week, micro Bitcoin has traded over 55,000 futures contracts. And when we launched on Monday, it did about 7,500 futures contracts, making it the 3rd best futures product launch in CME Group's history. It's third, micro E-minis is still in the pole position. In second place is the E-mini S&P future from 1997. So micro Bitcoin in third place is amongst very good company when we look at how those contracts have done over the years.
That is an impressive launch. I was just about to ask you how the numbers were so far. It does sound like, Tim, bit of a pent-up demand for this going into the launch. How long have people been bugging you? I know they've been bugging me, so they clearly must have been bugging you for the better part of the last 2 years for the launch of this product. And it sounds like from those early numbers, Tim, we're seeing a little bit of adoption over there on the micro future. That must bring a smile to the face of you and the team over there, sir.
Absolutely. And Mark, as always, you clearly had your finger on the pulse of the people. I should have just listened to you earlier on the first time you asked, how
many
really
times have I said that to you? I could have saved you like 2+ years of hand-wringing and development. Just call me up. I'll make your life a lot easier.
That's right. I'll keep that in mind for the future. And, it's been great. To your point, there clearly was an articulated demand for this product. It's off to a great start. It's also, similar to the larger size Bitcoin contract. It's being used across the globe. We're seeing good global participation, both from a U.S. and non-U.S. perspective. When we look at how it's being adopted, we've had over 500 unique accounts trade the product here in the first week. We're seeing participation, I believe, from a little over 50 countries. So it's geographically distributed well, a trading hour perspective doing well, and seeing balanced participation from all customer segments, from institutions to active individual traders. We couldn't be more pleased with the launch here on day 4 of the micro Bitcoin contract. It's been a lot of fun and really great to see it come to market.
Well, let's go check out the big dog for a second over here. You guys know where to find it. Head on over to cmegroup.com/TWIFO, TWIFO, or /TWIO, TWIO. Both of those should work. Click on the cryptocurrencies tab. Now you have 3 to choose from in there, which is kind of fun. Go to Bitcoin, and you'll see what we're talking about there. A decently active week, especially given what we've been seeing out there. It seems like, and Tim, maybe you've seen this anecdotally as well, but we've been watching the big Bitcoin options for a while, and it seems like leading up to the launch of these micro contracts on Monday, it did seem like we were seeing a little bit more action in the big contracts as well. I mean, of course, obviously some price action going on in Bitcoin as well, so that's certainly contributed to it. But you think the impending launch of these micro contracts drove a little bit more interest, a little bit more action in the big options, sir?
Yeah, I think when you look at some of the other cryptocurrency contracts, they're continuing to have a great run themselves. If we look at the original Bitcoin future BTC, which is a 5x contract, that had a record average daily volume in Q1 of 13,500 futures contracts. That's a little bit more than 65,000 equivalent Bitcoin per day, and that's up over 40% versus Q1 of 2020. So that's phenomenal, right? That this far in 3.5 years into the futures contract, still putting up, double-digit, multi-dozen growth year over year is phenomenal for any future success story. So really excited about what Bitcoin futures has been able to do. And Ether, the second token we moved into, that's also having its own moment in the sun here in May. So it's been really great to see all these contracts being adopted, being utilized. And I'm really excited to see what the next few weeks and months hold for all of the contracts.
Yeah, Ether, another one. You're right, having a big moment in the sun. We'll get to that in a second. Let's break down some of the paper going up out here right now. Coming on 300 contracts on the tape. Doesn't sound like a lot, but remember, that's a 5X contract. And compared to what we've been seeing out there of late, that's a pretty active volume out here in the big CME options out here. Let's look really quickly and see what people have been up to out here. We've been talking for a while in our crypto rundown program. I encourage you to listen to this show, listeners. Check out the crypto rundown as well. We get into all this data and a whole bunch more over there. But the vol ticking up a little bit this week, which has kind of been a story people have been asking for a while. Can Bitcoin vol continue to languish in the low 70s? It actually dipped into the 60s on the show on Monday, ticking up a bit now, coming into showtime at about a 74.5 in that front contract that has about 22 days to go. Get a little bit farther out, you're getting 76 or so level out there. So creeping up a little bit. Didn't seem like Bitcoin vol could stay that low for that long, and that seems to be what we're seeing, even though right now we're at about a 55,700 on that front contract. So Bitcoin off about 1,600 points, I should say, on the week. And if you're wondering what's the most active contract over there at CME, it usually calls lead the dance in Bitcoin. Of late, puts have been a little bit more active, and that's pretty much what we're seeing out here this week as well, with those front May 45,000 puts, as well as the SEP 40,000 puts, both leading the dance here with equal size coming up this week. So it seems like it's mostly puts here in the early offing on the big CME options. It'll be interesting to see how these options evolve and how much volume starts growing in these once we have the micro futures taking off, and hopefully someday down the road, the options there as well. But you mentioned the other thing that's really kind of just outshining everything these days, Tim, it's Ether. You guys had a good time launching the Ether futures not too long ago as well. So catch our listeners up. What have you been seeing on the Ether front, sir, since the last time we chatted?
Yeah, Ether has been off to a great start. If you recall, we launched those back in February of this year, so just about 3 months ago. And just this week, we had a single trading volume record of a little under 6,500 contracts in the Ether future. And that was back on May 4th of this week. So back on Tuesday. Now, what's exciting is, remember, that contract is worth 50 Ether. So we did almost the equivalent of 325,000 Ether in terms of the equivalent of what the future represented, which is amazing. To reach those type of numbers 3 months in is phenomenal. Super excited about it. I think that continues to speak to, Ether itself is hitting all-time highs from a price perspective. There continues to be lots of DeFi projects coming online. So I think the Ethereum network and the Ether space going to be a trend that sticks around for a while. I would encourage people to check out Ether futures at CME if they haven't already. And it's not just trading, record open interest this back on the third or fourth week of April, just about 2,500 contracts worth 125,000 Ether. And April, a few months in, but the April ADV was 2,500 contracts as well for the future. So all trending in the right direction on a trading perspective, on an open interest perspective. Ether futures are now on the CFTC large open interest holder, the large trader report. I think has a new record of 34 large traders, I want to say, this week. To put that in perspective, that's 3 months in. And I think it took about 9 months, if not a little bit longer, for Bitcoin to reach that milestone in terms of 34 large traders. So Ether, the adoption happening even faster than Bitcoin futures from back in the day. So it's been a lot of fun.
A lot of fun indeed. We could talk crypto the rest of the show, but we have a whole show for that on Mondays, listeners. Make sure you check out the crypto rundown as we keep on rolling into our next super active segment. It is time to explore the world of equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, let's get into it. In the world of equities, I usually like to set the table here, kicking things off, talking vol and everything else. But Tim, when you're not busy launching all things crypto, you also spend a little time over there in the equities, and we have to kick things off talking about the elephant in the room. You guys have made a lot of headlines in the equity options world this week. People have been bombarding us all week. Quite frankly, I'm surprised at how surprised people were at this announcement from you guys. But you guys deciding over there at CME to close up the big S&P 500 options pit and roll over that activity into the E-mini product going forward. Again, a lot of our audience surprisingly surprised at this. That kind of took me aback how many people didn't see this coming. But I'm curious for you and your perspective. This is obviously your domain over there at CME. Why did you guys decide to make this announcement and make this change now?
Yeah, so earlier this week, CME announced that we will be permanently closing all of the option trading pits, the open outcry venues, with the exception of Eurodollars. Those Eurodollar options will remain as an open outcry venue. And from an equity perspective, it is something that is a bit bittersweet, right? The S&P futures pit was the first pit for equity indices, our first product in equities at CME. So we're sorry to see that go, but the markets have evolved. The work from home environment and the pandemic floor closure, I think we're now in just about approaching month 14 of that. So the market has transitioned. When we look at the standard size of $250 multiplier on the standard big S&P options, we're doing all that volume that we're doing right now is all happening in block trades, doing about 17,000 contracts per day. So we've made the decision to not only close those venues, but we're delisting the S&P big options and big futures, the $250 multiplier standard. So we are effectively moving to an E-mini only ecosystem, but we'll also be introducing block trades on the E-mini options shortly this summer. So everyone who's used to trading the standard in the pit and doing the block trades in the standard the past few, over a year plus now, they'll have that same type of transactional handshake in the E-mini with all the benefit of one of the most liquid electronic options products on the planet, the E-mini S&P 500 options. So we're confident customers will have the same type of liquidity, the same type of experience, and now they can do blocks and outrights on Globex in E-minis in short order. The last trading day, because that's a question we're getting from a lot of folks in standards, will be Friday, September 17th. Of 2021, so September expiry. Now, I will caveat everything I just said, is subject to regulatory review with the CFTC. So stay posted, reach out to myself and the team for any of the logistical questions on how we plan on migrating to the E-mini only offering at CME. But, as excited we are for the long-term growth prospects of what this means for options at CME, certainly a nod in homage to the floor. It's had a great run. It's been a great vehicle for us in the equity options. And certainly a bittersweet day for some. And we just want to be respectful of that and thank everyone for all of the work they've done over the past several decades in growing the standard size, the big contracts at CME. So it'll be a bit sad sorrow to see it go.
You're right. Always a sad day to see another historic pit go the way of the dodo out there. But, one of the pushbacks we've always heard about closing the pits, particularly for the large index products, has been that the big institutions, they still demand that high touch execution, particularly for their complex orders. But it sounds like, Tim, you and the team over there at CME think you can approximate enough of that functionality with the block trading and everything else that the institutions are going to be fine trading in the E-mini along with the retail.
Absolutely. They've been able to do it the last 13, 14 months by trading standard size block trades. They'll have all the same type of transactional handshakes and elements available to them for outright block trades, spread block trades. They can use some of the Globex functionality as well to augment their block trading. So I think they're going to be in great hands. We have a great floor broker community who we've been talking to the last few days. They're ready to work with their clients alongside CME and transitioning people into block trading the E-minis. So I think everyone's just going to be fine. I actually think in the long run, they're going to be great.
I remember it doesn't seem like it was that long ago, Tim, when Globex and the E-mini first came online, but it was a while ago now. I remember back then you can only do a limited amount of size in the E-mini. Oh, how things have changed. Of course, took a little bit of a pandemic to get us all the way there, but that's the world we're living in right now. Speaking of that world and how things are lining up from an overall equities perspective, let's set the table as we're coming into today's show. A little bit more vol on the screen this week, particularly out there in small caps land. Like I mentioned, they're moving and shaking to the dark side again this week. So again, for a long time, the narrative was, could small cap vol, aka RBX, break through the 30 handle? It did so and hung out there for a while. Now going back up in the other direction, up to almost a 28 to kick off the show, about a 27.93, puts it up almost 5 points and within spitting distance of that 30 level again out there. So a little bit more juice to be found out there in the small cap hills these days. VIX come into showtime also getting a little bit more frothy, a little bit more topsy-turvy out there. North of the 19 handle again, closing in on a 19.5, puts it up about 2 points from where it was this time last show. VVIX, which is the vol of vol. These vol products are moving. So the volatility of volatility also getting up there again, up to almost 111, up nearly 6 points from where it was this time last show. And something could finally budge vol Q. It seems like it's been locked at 20 for so long. Now back up to 22.20, puts it up about 2.25 points from where it was this time last week. So we're seeing that VIX to RVX, so that small cap to large cap vol spread at about an 8.5. That's almost 3 points wider than the last show. I think a lot of that coming on the heels of this big pop we're seeing out there in RVX. And the VIX to vol Q at about a 2.8. That's actually only about a third of a point wider. So even though vol Q actually managed to budge this time, VIX also moved up. So that kind of kept that spread close to about the same. So a lot to unpack there. Sean, I know a lot's been going on in your neck of the woods since the last time we chatted in all things small caps. So what's been lighting up your tape? What's been catching your eye, I should say, in the world of small caps these days, sir?
It's and Tim, feel free to chime in. And you know, I know you mentioned me at the beginning of the show, and welcome to the show too. It's always great to be on the show with a good friend. So I didn't get a chance to say that at the beginning of the show, so I wanted to make sure I said that to you, my friend. Small caps continued to outperform. You know, they didn't in April. April large caps outperformed small caps, but on a year basis, on an annual basis, small caps continue to outperform the rest of the benchmark market. And it's you know, we've just had some really good economic data over the last several months. You know, but it. Again, not all of it's good, which has brought volatility to our domestic U.S. index, the Russell 2000. You know, CPI was up. You know, it's an inflationary number. Unemployment back down to 6%. Retail sales up 9.8%. I mean, that's directly related to our domestic companies. People are buying things again. Employment's dropping, so the smaller companies are hiring more people. Unemployment is 6%, as I said, drops to 6%. The Fed doesn't change rates. Rates remain at historic lows. Our President Biden is pushing a $1.9 trillion spending. You know, that's all going to bode well for U.S. companies trying to rebuild the United States. GDP up 6.4% in the last report. So you've got these numbers. There's a couple of them that are downticks, and I think we had some downside volatility, which large caps have been able to outperform small caps in the month of April. But I think the last time, Tim, we were on the show, we said that there's kind of reasons for some breaks, but where Russell just didn't keep that rally going. We talked about upside call buying, which continues, by the way. But interesting times, interesting trading times. Volumes stay strong in the CME futures, mini and micro. Open interest stays strong, which is that anchor of confidence in the market and its investability in small caps, and people continue to invest. So it's been a great ride. This past week continues. That ride just continues in the past week.
The ride does continue. Indeed. Let's see what's lighting it up over there at CME. You guys know where to go to find this, CMEgroup.com/TWIFO or /TWIO. Head on into the equities, then get on into the Russell 2000. That's where you could begin your journey on the equities this week. We're at about a 2209 coming into Showtime listeners, puts it off 51, almost 52 handles, or about 2.3% here on the week. The vol out here, like we mentioned, creeping up in that RVX. That's reflected in that front contract that has, a whopping 1 day to go at about a 28.25 as well. So aping RVX pretty closely there. If you go out about a week, the vol's about as 26.5. Either way, the vol's up pretty firm across the board. Of course, as in most equities, the lion's share, almost a third of the activity this week, coming in that contract with 1 day to go. So let's see if we can go a little bit farther out. Yeah, let's go to the week 3 May contract that has about 15 days. So that's about 21% of the paper. A little bit more sane level heads out there in the week 3 contract. And that vol right now, the at-the-money vol at about a 26.5, up about 2.5 points. And we're looking at skew out here, looking at the puts. The puts were pretty rich last week, 15.4%. We've obviously seen a bit of a sell-off since then, so the puts have come in a little bit, down to about 13.4%, so down about 2 points on the puts. The calls, 12.1% cheap last week. This week, 12.3% cheap out there. In terms of what is the most active contract, people have been asking for a while. What about these small delta calls? What about these small delta calls? And that does appear to still be the case, even though some out-of-the-money puts also seem to be lighting up. In fact, it's neck and neck. The 2,300 calls going out tomorrow, we're lighting it up this week, as well as the 2,000 even puts in June. Pretty much almost exact same volume for both of them. That's kind of interesting. I know for a long time it was a little bit farther out of the money puts that were dominating the tape. Now it seems like we got a little bit of both, because those 2,300s are clearly, just by virtue of decay, very small delta calls right now. They only have a day to go. If that's not small enough delta for you, want to go a little bit farther out. Contract still has some meat on the bone out there. Let's go to the 2,500s, also trading out there in SEP. They have 133 days to go, and those were also trading pretty hot and heavy this week as well. So small delta calls still alive and well out here in Russell 2000 this week, even though some puts starting to make their way into the conversation as well. So it's not all upside all the time. And again, we're selling off this week, so not exactly surprising, but some puts starting to fight their way out there into the mix as well. Tim, like I mentioned, when you're not launching all these hot new crypto products, you're also busy launching a bunch of stuff in the equity space. First off, what are your thoughts, if any, on what Sean was just talking about all things Russell 2000? And then, of course, the last time you were on the show with us, you announced the launch of the new E-mini NASDAQ 100s out there with the Wednesdays and weeklies. So how are things lighting it up on those and the rest of the ever busy, ever volatile equities complex these days, sir?
Yeah, so, Sean, as always, nails it perfectly with his stats and figures of how things are going at CME. Sean, it's almost like you worked here at one point or something, right? So, the Russell 2000 continues to be a very bright spot, not only from its index performance, where it's kind of leading the pack here in 2021 year to date, but also in terms of the tradability, right? When we look at it, to put it in perspective, Russell 2000 E-minis doing about 206,000 contracts per day here in 2021, up 2% versus full year 2020. The micros absolutely crushing it, doing about 175,000 per day, up almost 90% versus last year, almost double. Now, when you put that in perspective, that's outpacing some of the other indices, the major indices like the S&P, NASDAQ, and the Dow. And I think that just reinforces the moment that Russell 2000 small caps are having when you look at the backdrop of the U.S. economy, some of the macro events, the legislative agenda, the continued work from home environment. These are all things that what we say at CME this year is index choice matters. The indices, while tracking the U.S. economy and major benchmarks, they all do. They track very different components and aspects of it. So the Russell 2000 is a great tool right now, alongside all the other ones. Like NASDAQ is doing great. I mean, they're all doing great. S&P, NASDAQ, Dow, but I think the Russell continues to be a certain attractive trade in the marketplace. And I just enthusiastically agree with everything that Sean is saying, if you can't tell. Now, we did launch the Monday and Wednesday NASDAQ, similar to Bitcoin. Sometimes you got to listen to clients. They're very smart. They know what they want. And they were telling us that they want the Monday and Wednesday short-dated style of options on NASDAQ, just like they have in S&P. And it's been off to a great start. We launched those back just under a month ago. I think it was back in April, right? Seems both short and long ago, but just a few weeks, and we're already doing 5,000 contracts a day across the Mondays and Wednesdays. Now, that may seem like a small number, but when we launched those on April 12th to hit 5,000 contracts as of May 3rd, earlier this week, is a phenomenal accomplishment. And when you put that in grand scheme of things, the NASDAQ, which is doing okay, it's having a really good growth year at CME in terms of option volume. But, we're talking about 5,000 contracts in NASDAQ is almost a 25% increase in the total of all NASDAQ volume at CME with respect to options on futures. So to have that type of bump from Mondays and Wednesdays from just the index family perspective of products here at NASDAQ 100 has been great to see and a great addition.
Speaking of great additions, let's take an opportunity to make NASDAQ an addition here on the show. Don't get a chance to go out there and parse all things NASDAQ that often here on the show. And by the way, Tim, it does seem like your near-dated wager is paying off. I'm looking at the numbers right now. You know where to find the listeners. Just pull into the equities drop down, drop into the E-mini NASDAQ 100. You'll see right now, Tim, of all the paper going up this week, so you're talking nearly 100,000 contracts already, almost 40% of that, 39.7%, is in the contract that has 1 day to go, Tim. So clearly people like some near-dated contracts in NASDAQ, sir.
Yeah, I think, that's the short-dated trend continues. We're just more and more folks want that precise exposure, less than 10 days to go to expiration. And so it's been great to see it, and really excited to see how it how it grows from here. And, we also have the micro NASDAQ options that we launched not too long ago. So index choice matters. And I like to say we got lots of choices at CME. So you should check them all out and find the right tool for you when managing your risk or accessing the market.
All these people trading these near-dated no consideration for me here on the show, making me have to analyze this stuff that's going out in a day here. Kind of hard to talk skew and volatility on a product that's gone in a day. But, that seems to be the way it is. Nearly 40% of the paper in this weekly front week contract here. Let's get into it really quickly. By the way, if you're wondering, at about a 13,489 in the NASDAQ right now, selling off a bit out there this week. So a little bit of a tech wreck going on, mini one out there and carrying NASDAQ down a little bit with it. Yellen also spooking some folks out there this week. Vol-wise, talking about a 24.5 in that contract that everybody's slinging this week. That's up 7.25 points. If we go a little bit farther out to a little bit saner, let's say, dare we go out, 2 weeks. You're talking about a 21, 22 out there in those contracts out there. So a little bit less vol, but probably a little bit more reliable vol metric out there. I mean, we can do skew in this contract if you really want, listeners. You're trading it, so clearly you want to. Puts last week 10.5% rich. This week 14.1%. So puts getting a little bit of a lift. Again, we're selling off pretty aggressively, so that's probably playing a hand in that. Calls, last week 8% cheap. This week 12.6% cheap. So usually this kind of sell-off, you might see a little bit of calls actually keeping their premium a little bit of that skew kind of rotating. Not seeing that, but then again, read into this with a huge grain of salt because this is all going out tomorrow. In terms of the most active contract out here this week, it was the 13,750s. So you're talking almost 300 handle out of the money contracts that were going up in this contract going out tomorrow. And guess when those are trading, listeners? Today. So, wow, 2,500 of that 3,000 or so trading today. Looks like 13,800's also trading 1,260 times, and then 13,700. Looks like we got a bit of a fly going up here. 13,700, 13,750, 13,800 going up, 1,400 by 1,260 by 2,511 times. 2,511 obviously being on that middle strike, listeners. That's a strange one. Doesn't look like the OI really supports, except only OI there is on the 1,800 strike. So this is opening on those other two strikes. That's a strange one. 1 day to go, opening up on a fly, 300 or so handles out of the money. That's not what I expected. But then again, the equities, they're sometimes interesting beasts. Now, we see that kind of weird upside paper in products like gold and to a lesser degree in the crude and energy and WTI. Not so much in the equities, but NASDAQ apparently playing fast and loose with some of the paper out there. 14,200s also pretty active. These are in the week threes going out in 15 days. 1,300 contracts going up in a contract that's over 700 handles out of the money out here. So weird paper afoot here in the NASDAQ, which is a bit head-scratching. You folks out there trading near-dated contracts in the NASDAQ, you have some thoughts on what's going up out here, hit us up, let us know. Meanwhile, though, we got to squeeze in at least one more product before we get some of you folks on the show. And I mentioned at the top of the show, the ags have been lighting it up of late. I would love to parse lumber. We have done it before. All 8 contracts of it that goes up out here these days, but we're not going to do that again, at least not right now. Just because let's squeeze on a little bit more of the ags.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, welcome to the ags section. Corn, one of the lone standouts here this week. The last couple of weeks, it's been most of the ags have been just dominating the upside. This week, corn, the last of the Mohegans up there, up nearly 7% this week. It was number 3 in the same direction last week, number 4 this week, up 6% again last week. So a good couple of weeks for corn. As we've remarked on the show before, corn is surprisingly deep, surprisingly liquid, surprisingly active contract. So if you like to hang your hats in, let's say, the Russell 2000 or the NASDAQ or the E-minis, and you want to maybe spread your wings, maybe like a little bit of WTI, another place you could look for liquidity and volume and volatility is, of course, the corn product. Coming into today's show, we're seeing some paper on the tape out there. Now, obviously, this is an active week out here, listeners, but still closing in on 1 million contracts, 850,000 contracts already on the tape out here in corn. So corn, no slouch when it comes to the action. Also, one of the nice things, one of the refreshing things about the ags, not all of the paper is going away tomorrow, which makes it a little bit easier from my perspective when it comes to analyzing this stuff. This week, it's all in the D's, 35.5% going up in the D's contract. By the way, if you're wondering, that front future coming into Showtime at about almost a 720. It puts it up about 46.5 handles, or nearly 7%. Going out to the D's future, it's a little bit less. It's 627.75, up about 64 handles, or 11.3% out there this week. The vol in this contract in D's, talking about a 36, almost 37, up about 1.5. So that's getting pretty frothy. I mean, we're just talking about S&P vol, a.k.a. VIX, around a 19. Small cap vol getting close to 30, but not quite getting there at about a 28. Now we got a corn at about a 37. So a little bit of vol out there in them thar hills. In terms of skew out here in D's last week, the puts, 2.1% cheap. This week, 7.6% cheap. Going out to the call side, the calls were where the action was last week, 6.1% rich. This week, we've seen a big move, so the calls coming in a little bit, 3.8% rich. Calls still bid, though, out there in cornland, which I guess, given the headlines of late, kind of hard to argue with that. And if you're wondering what the big hot contract was this week out here in corn, given the fact that we just broke through the 600 strike in this D's contract here, not surprising that these 600 calls would be dominating the tape this week, listeners, with 41,300. That's more paper in just that one call than we're seeing in a lot of other complexes sometimes out here in some of the quieter metals and other things like that. So interesting paper out here, 41,300 of these D600s of that. The big day actually today, nearly 17,000 going up today, 11,000 on Tuesday, 7,200 on Wednesday, and 6,300 on Monday. Most of that earlier in the week was opening, but again, we can't really tell about today's paper. So a lot of action in the D600s. Number 2 right behind it looks like it was a pretty distant number 2 out here, actually. It's the 700 calls out here in July, doing about half as much paper, about 20,000, nearly 21,000. Most of that paper coming on Monday, 7,800, followed by 7,100 on Wednesday, 5,300 on Tuesday, and back and forth throughout most of the week. So no clear bias to that. So it's D600s where the action was out here in corn this week. Interesting stuff. You know what else is interesting, listeners? It's your mail. So let's get to it. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Time for you guys to take the reins on the show. You guys ask us questions. Sometimes we turn that spotlight back on you, just like we are doing right now with our question of the week. Get out there if you haven't done so already. At Options is a place on Twitter to make your voice heard. Testing some of your long-term outlook in the markets right now. He gave you a very simple, maybe deceptively simple question, judging by the results so far. Quite simply, if you had to buy a 10% out of the money call that expires at the end of the year, so December 31st, on one of these different underlyings, which one would you choose? And we gave you 4 disparate answers to choose from. First off, VIX, so broad equity market volatility. Then we gave you the major large caps out there, the S&P 500. I don't care what flavor. Could be ES, SPY, whatever flavor you want. Something in the S&P 500 family. We don't judge here. Number 3, Bitcoin. And number 4 is crude oil. Tim, you have a few dogs in this race, judging by a couple of our choices out here. So I'm curious for you, if you have a vote, have at it. But more importantly, what do you think our audience is voting for, Tim?
I don't know. I feel like, the trend is my friend. I feel it's like Bitcoin's week, for me and the team here at CME with micro Bitcoin. So I'm going to say Bitcoin.
Going for, yeah, it's kind of hard to argue with that trend. Sean, same question for you. If we could have had 50 slots out here, everyone's always writing in. Why don't you put this one? I would have loved to put small caps and a bunch of other things in there. They limit us to 4. So Sean, if you have a choice here, have at it. B, if you want to do a write-in, I'll allow you to do a write-in. And then C, more importantly, where do you think our audience is lining up, sir?
My guess, well, first of all, I'd like to write in small caps, of course.
How did I know you were going to do that, sir?
You just knew that answer was coming from me. But if I was to take, and I was just mandated to pick one of the 4, I'd be going with Bitcoin as well.
Interesting. 2 votes here on the panel for Bitcoin. Seems like our audience a little bit more divided than the panel here. This is what makes it interesting. Also, what makes the market, obviously, people are getting pulled in a lot of different directions. Right now, Bitcoin is leading the dance, but ever so slightly. Only 32% of the vote going Bitcoin's way. Hot on its heels is the S&P 500 with about 29%. Then we got number 3, crude oil, closing in on 24%, and with 15% bringing up the rear for the VIX out there. So not much love for the volatility space, but still kind of a pretty close race. Got about a day left. So if you're listening to the podcast, you still have time to get out there and vote after the fact. If you're listening live, you can get out there right now at Options. Make your voice heard. You have write-ins too, like Sean had a write-in for small cap. A lot of you have write-ins. We have Tin Man John 64 chiming in saying silver is better than all of these choices. Yeah, I would love to put a metal in there too and a few other things. Blame the format, blame the platform. Don't blame us. Twitter only lets you put 4 things out there. So we thought this is a representative sample, but hey, we could do more. You're right. Silver, that's certainly a good choice. It's feeling a little bit of a love this week. We have Neil chiming in, say he's already voted for crude oil. So a fan of the crude oil. You can make an argument, I think, for most of, not all of these being up 10% by the end of the year. You can also make an argument pretty strenuously against all of them being up for the end of the year, which is what makes this poll fascinating. Get out there, and a lot of you already have, but get out there if you haven't already at Options. Make your voice heard. All right, Tim, next up. You knew this question was coming. This time, it did not come from me, sir, so you cannot blame me. I am just, as I've said many times, I am merely the voice of our audience. And this time, I am the voice of Elliot, who is asking, okay, the micro Bitcoin futures are live, so you know what I'm going to ask. When are the options coming? So there you go, Tim. You can't blame me. Just the spokesperson for our legion of listeners out there who want to know, Tim, when can they get these micro options in their hot little hands?
Oh, it's always a good question. Mark, I know you're just voicing the will of the people. But it's a great question. We don't have an answer. Right now we're focused on micro Bitcoin here on day 4 of that product launch. But Mark and your listeners are not the only ones asking. So we'll be keeping our eyes and ears open to see if we should be looking at micro Bitcoin options on the futures we launched this week, or what we should do in terms of contract specs with the existing options. So it's something we're watching. But right now we're focused on getting the micro Bitcoin futures to an even greater position the first few trading days. I mean, it's already been successful, but we got a little ways to go. that'll be our focus, and just stay tuned. And who knows? I'm sure, at the current record mark, you'll have me back. So lots of more time to ask me about micro options, or maybe the next time we'll be talking about micro options. But who knows? Right now, we're focused on micro Bitcoin.
Yeah, if the past is prologue, Tim, it'll be about 3 weeks when you're back with your next product, and then we'll have micro Bitcoin. So Elliot won't have to wait that long. There you go, Elliot. See, it's not coming from me. I am just a man, indeed the voice of the people. Next up, we've got Faraz. Yeah, he's chiming in on something we've been remarking on the show here for a while. He chimed in to say, seems like everyone is picking up on this whole, quote, dead trees are the hottest commodity on the planet thing. He goes, let's go lumber options, exclamation point. He included a link to an article. Looks like this is from The Atlantic. Interesting stuff. They're breaking down what's going on in lumber. Because as we've been saying on the show for a while, lumber has been number one in most of our movers and shakers reports every week for quite some time now out there. We've been talking about, of course, the demand side for building and everything else. This article from The Atlantic kind of breaks down some of the supply issues going on out there as well, which is kind of interesting. They point out North America lumber typically traded in 1,000 board feet units out there. Builders typically need about 15,000 board feet on average to construct a single family home. And from 2015 to 2019, lumber traded at $381 for 1,000 board feet. Now it's gone up to, at this article, they said 1,104. We're well north of that now, listeners. 1,607.5 coming into showtime. They said that amount alone has added about $24,000 to the cost of a new home. And they say in addition to the demand driving all of this, there's been a bit of a 1-2 punch on the environmental side, which is contributing to this acceleration in the price of lumber. Canada, obviously the largest lumber exporter to the U.S. They had a multi-decade outbreak of bark-eating beetles. That's really damaged a lot of their lumber supply over there. On top of that, like we had in the U.S., they've had catastrophic wildfire seasons up there in Canada. So all of that combining for a bit of a 1-2 punch on the supply side. Also, wrap in the fact that everyone's building and buying and upgrading new homes, and Sean's building the fence. All of this driving demand for lumber on the supply side. So it has been quite the perfect storm of, as they say here in the article, and as he mentions, dead trees. Kind of the hottest thing. Forget Bitcoin, forget Doge. It's all about dead trees these days. I wish I could parse it for you here, Faraz and everyone else. 92 contracts on the tape right now. By the way, if you are wondering, actually, I got so busy this week, I don't think I even broke down the vol movers and shakers. Let's hit those really quickly, because in the advancing column, it's all lumber. Lumber 90-day contract was up 5.5% from a vol perspective. Lumber 60-day contract was up 5%. And the lumber 30-day contract was up 3.25%. If you're wondering what that vol is, that front contract that has 22 days to go, listeners, it's trading at a 91 vol right now. Up almost 21 points. And you can't really argue with it. This thing is moving like crazy. It's up 16, nearly 17% this week. So even though only 92 contracts have traded, by the way, if you're wondering what the most active contract out here in lumber is, we're trading at 1607 right now. The 1,300 puts did a whopping 12. That makes them the most active of the 92 contracts. Hopefully, this action in lumber will start sparking some interest in these options. I have noticed this is a little bit higher than we have seen of late out here, so it's something. Hopefully, we'll start seeing the trend. It is a big, beefy contract out here, so not exactly suited to retail, kind of like what we were talking about earlier with the big Bitcoin contracts out here, but would be nice to see some signs of life out here. If this isn't going to drive interest in lumber, I'm not sure what it is. But I'm with you there, Faraz. Dead trees are now the hottest commodity out here on the planet. All right, everybody. Unfortunately, that music means we've come to the end of another sojourn through the world of futures options. Oh, what a journey it was this week. We started off with all things finally, listeners. Finally, you're getting your bite-sized Bitcoin contract out of CME. Also talked some ETH and what's going on out there from an options perspective. Got into all things equity, small cap, even been into some NASDAQ today. That was pretty fun. Got into some corn and some ags, even parsed a little bit of lumber out here and a whole bunch more. But before we go, Tim, this is the portion of the show where we like to leave our listeners wanting more. So I know you guys are always working on something hot and heavy over there at CME. So if you want to leave them with any hints, any teases of what's coming down the pike, or maybe perhaps what you're even interested in over there at CME these days, now is the time, sir. The floor is yours.
Yeah, I mean, not necessarily anything new that we haven't covered, but, lots of recently new stuff. I just encourage people to head to cmegroup.com. Lots of great educational resources, lots of great information. And we can look at things like micro Bitcoin futures, micro S&P and NASDAQ options, new NASDAQ Monday and Wednesday, and then the longtime favorites. Lots to go on in ES options, Russell options, NASDAQ E-mini options. So lots of things to choose from. They're all doing great, all really important risk management tools or ways to access the market. So just check it out. If you have anything, reach out. And Mark, your listeners are always great at contacting you. They can contact you, contact CME, and just, really check things out. And we're here to help. And, keep the great product ideas coming because, not really a joke, but it seems like we are rolling out lots of stuff, but I don't know what's next. So I'm all ears. Tell us what you need, and we'll see if we can make it happen.
Yeah, if past is prologue, you'll be back on in about a month, Tim, with something cool and new. So I'm looking forward to that as well. So
That's right.
Elliot and everyone else who's waiting, just bide your time. We'll see in about a month what else Tim and his team have up their sleeves. And speaking of having things up their sleeves, Sean, you guys and the folks over there at FTSE Russell always working on cool new research and analysis and all sorts of other fun things going on in the world of small caps. So A, if you got anything up your sleeve you want to share, now is the time, sir. And B, if folks want to learn more, they want to kick the tires for themselves, where should they go? What should they do?
Well, I do have something slightly up my sleeve, and that is tomorrow is May 7th, which is the kickoff of Recon for 2021 for the Russell series. So Russell 2000 Recon, it all starts tomorrow, where all eligible companies that are lined up for their preliminary Russell reconstitution. So tomorrow is rank day. So there's some preliminary dates following that in June, culminating with the reconstitution on June 25th. So we've got tons to talk about in the coming weeks, Mark, and I'm really looking forward to that. But again, we announced those that the ranks of those preliminary stocks tomorrow, and of course we're going to be doing some fun stuff with the CME and Cboe Global in regards to that. So I'll be on the lookout for that in the coming weeks, and I'm really excited about a really exciting recon this year. So that's one. And secondly, I wanted to thank Tim for joining us today. It's always a pleasure. Congratulations on another tremendous successful product launch. Tim, it just seems everything you touch turns to success these days as you launch these products. And I just wanted to say, once again, congratulations. Any questions, you know where to go. FTSERussell.com. Sean.smith@lseg.com is where you can find me. Happy to answer your questions. Happy to help you. Happy to help point you to CME and their websites. And I might even whisper Tim McCourt's email address to you. So if you need anything, feel free to reach out to me. I won't do that, Tim. I'm just kidding.
Throw poor Tim under the bus, why don't you, over there? He'll be deluged before his next appearance in roughly 3 weeks to a month. So you know where to go to find out more about all things small cap listeners over there at FTSERussell.com. On behalf of Sean and Tim and Adib myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live, for voting in our polls, for sending in such great questions about mini options and dead trees and Bitcoin and everything else. Keep it coming. We love to hear from you. We're back again tomorrow, noon Central, 1 p.m. Eastern for volatility views. Kicks off again on Monday with the option block and the crypto rundown. If you're listening to this, you probably should be checking out the crypto rundown all the way through again to Thursday and another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.